Hello, Accounting 201, my live online class, and all of my Accounting 201 because I'll be sharing this video for all of my sections. So, um, this video is going to be our Chapter 1 homework review, and let's get started. Actually, no, that's okay. Let's get started. Okay. All right, so at the beginning of year 2, Better Corporation's accounting records has the following general ledger accounts and balances, okay? So as of year 2, we're starting with these balances and these accounts, okay? So remember, these are our elements from our financial statements, and these are some of the accounts that are associated with some of those elements. All right. So we had a balance of $10,000 cash, 20,000 in land, 12,000 notes payable, 7,000 in common stock, and 11,000 in retained earnings. So what you're going to do is you're going to have a series of events that happens. The first one is we purchased land for $5,000 cash. Now, when we purchase anything for cash, what does our cash do? Our cash goes down. All right, so just a little side note, because this is our first video together. I am always going to be showing you like the whole thing. So what you want to try to do is not just look at my homework review videos and plug in the right answer. You need to know why you're doing what you're doing. Otherwise, you won't be able to be successful on the tests or even the quizzes. And I was telling one of the classes today, try not to use the guess and check method, because if you use the guess and check method, you're not going to have that method available to you on the final exam or any exam. All right, so let's go in here. So we've got our accounting equation for year 2. So our cash decreased and our land increased. So we're going to show a decrease with parentheses. In the accounting world, a parentheses means a negative, like a negative balance, although you're really not going to see those, or a decrease, right? Enter any decreases to account balances with a minus sign. Okay, well, you can use a minus sign or you can use parentheses. What will happen is if you use a minus sign, when you hit enter or tab, it will turn it into parentheses for you. Okay, either way, it's going to accept it. Okay. So we purchase cash, so we're decreasing cash and we're increasing land. Nothing else is happening. So the other nice thing is, because this is a video, if I'm moving too fast, just pause me, rewind, and listen again. Or listen on slow-mo, right? Okay? So I may go a little bit faster than I would if I was in class, only because you can sort of slow me down on your own if you want to, or if you want to pause it, take some notes, or rewind it, fast forward. Okay. So number 2, we're acquiring $25,000 cash from the issuance of common stock. So our cash is going to go up and our common stock is going to go up, right? That is an asset source transaction. This was an asset exchange. Not that they asked us to do that, but just keeping it in mind. Received $75,000 cash for providing services to customers. So we're going to put in $75,000. Cash is increasing and retained earnings is increasing. Retained earnings increases when revenue increases, right? So one of the things they asked us to do is they asked us to choose one of these items. Whenever we were touching retained earnings, we needed to choose what is affecting the retained earnings, right? So $75,000 of revenue. We paid cash operating expenses of $42,000. So our cash is decreasing by $42,000 and our retained earnings is decreasing because our operating expenses were increasing. Okay. So that's the only thing that kind of gets tricky. When you have expenses, the expenses are going to decrease retained earnings, right? Retained earnings is what? That's the money that we have left over, not the cash necessarily, but the money that we have left over after we take in our sales and subtract our expenses, right? So we are decreasing our retained earnings by increasing our operating expenses. All right, number 5, borrowed $10,000 cash from the bank. All right, so our cash is going up and our notes payable is going up. That is when our liabilities, if you remember, that's when we owe somebody else. We need to pay them back. Number 6, paid $5,000 cash dividends to stockholders. Oh, that was nice of us. So again, cash is going down. We're decreasing cash because we paid it out. And we're decreasing what? Retained earnings by increasing our dividends, right? We paid a dividend, so that is money going out of our company. All right. Determined that the market value of the land purchased in event 1 is $35,000. Okay, well, that's great to start with. We spent $5,000 cash, but it is now worth $35,000. So it increased in value by $30,000. Question is, do we do anything with that? The answer is no, we don't. We don't do anything with that because GAAP tells us that we need to use this historical value concept. And what is that concept? That concept is the only thing that stays on the books is what we paid for it, the historical value. Market value, that's just what somebody else is willing to pay for it. So somebody else is willing to pay us $35,000 if we want to sell, but tomorrow it could be $25,000. Tomorrow it could be $2,000, right? So we do nothing for number 7. Okay, so that's it for requirement A. Requirement B is as of December 31st, year 2, determine the total amount of assets, liabilities, and stockholders' equity and present this information in the form of the accounting equation. Okay, so our ALO, or if it was owner's equity, right? Okay, so how did they get that? Assets. They added the 68,000 and the 25,000. They got 93,000. Liabilities, all by itself. That's all we have. It's our notes payable, 22,000. Okay, stockholders' equity or owner's equity. That is the combination of our common stock and our retained earnings. So they add those two together and they get 71,000. That is the ending balance as of December 31st, year 2. The next question asks us, what is the amount of total assets, liabilities, and stockholders' equity as of January 1st, year 3? Well, January 1st, year 3 is our beginning balances, and our beginning balances are exactly the same as our ending balance. We have done no transactions from December 31st to January 1st. So everything is the same. Fantastic. That's question 1 of 12. All right. On December 31st, Moss Company had these items here. Okay, so they had cash, notes payable, common stock. During year 2, they earned some revenue, they paid some expenses, and they paid out a cash dividend. Okay, great. Let's see what we need. A, determine the amount of retained earnings as of December 31st, year 1. Okay, so retained earnings is our assets. So what's our equation, right? So our assets, our liabilities, our assets equals liabilities plus stockholders' equity. Our stockholders' equity is made up of common stock and retained earnings. That is the only one we're missing. So we know our assets, we know our liabilities, we know our common stock. Okay? So retained earnings is going to equal the 195,000 minus the liabilities that we owe to other people minus the common stock that we still need to pay back, right? That's stockholders. We have to eventually pay that. If they were to sell their stock, we would have to, pay that money, right? plus, and then we're left with $20,000. So our retained earnings is $20,000. Okay. Requirements C or B and C. Create an accounting equation and record the beginning account balances, revenue, expense, and dividend events under the appropriate elements of the accounting equation. Okay, so we have our beginning balances. So they want you to put in all those beginning balances. Now we know what retained earnings, right? We know what retained earnings is. We got these balances from right up here. Okay, and then what else did they tell us? They earned cash revenue. Okay, so our cash is going to go up and our retained earnings is going to go up because our revenue went up. Then they paid cash for expenses. So our cash is going to go down and our retained earnings is going to go down because our expenses went up. We paid a $3,000 cash dividend, so our cash went down and our retained earnings went down again because we're paying a dividend. Okay. Requirement D. Okay, complete the equity account equation. So they're looking for the end. Look what we got here. 210,000 plus these three. So 210,000 plus our liabilities and our stockholders' equity, right? These two we need to add together. Okay, that's question 2. Again, I know I'm moving fast, but I have 12 questions to get through. So here we go. All right, so January 1, year 1, the company experienced the following accounting events. I think it's annoying when they list the events in a paragraph. I would rather them just put it in a bulleted list and have me deal with it then, because then that way I don't miss anything. Okay. Record the effects of each accounting event under the appropriate general ledger headings. Okay, so again, we issued $50,000 of common stock. We earned cash revenues. We paid expenses. And we paid a cash dividend. Okay, it's exactly like the first 2 problems we did. Okay, I'm going to leave this right here for just a second. You take a screenshot of it. Just make sure you understand why things are going in the places that they're going. All right. Prepare an income statement, statement of changes in stockholders' equity, and a balance sheet dated December 31st. Okay. So here's the income statement. What is our income statement? Really, really simple at this stage, you guys. It's our revenue. What's our revenue? Cash sales, right? The revenue minus the expenses equals our net income. Okay. Our revenue minus expenses equals our net income. Okay, plus, okay, so it's changes in stockholders' equity. Let's scoot this down just a bit. There we go. Okay, so we have $50,000 that we issued in common stock. So there's our ending common stock. There's our net income. Where'd that come from? So you could plus net income or less a net loss. Where'd that net income come from? Remember, it came from our income statement. So 18,000. And we paid out dividends. And then, of course, they did this for you. Ending retained earnings, stockholders' equity. All right, so we have our balance sheet. There's our cash, 65,600. Where did that come from? Right, it came from our little equation. There's our total assets. We didn't have any land, right? Nothing here. Stockholders' equity. Okay, we have common stock, 50,000. And then our retained earnings. Oh, how did we get that? Look, our ending retained earnings. You're going to see how one statement sort of flows into the other one. So that's how we got our retained earnings. And then, of course, they brought this over for you. And if you notice, 65,600 for our assets, 65,600 for our stockholders' equity and liabilities. We balance, hence the balance sheet. All right, number 4. Okay, so on this one, they're not asking us to record these. They want to know, is it an operating activity, an investing activity, or a financing activity, right? So an operating activity is anything that has to do with us operating our business, right? The sales, the revenues that we take in when we buy supplies or we pay for expenses, that is everything we need to operate our business. Investing activities, that's when we purchase or buy or sell land most of the time, or buildings. And financing activities is our asset source transactions, right? We're issuing common stock. We're borrowing from a bank. That's financing activities. So let's kind of look at these. Okay, so perform services. What do you think that is? We perform services. What's that? That's revenue, right? That's an operating activity. Purchase land. Ooh, ding, ding, ding. You hear land? Invest, invest, invest. Okay, investing activities. Hired an accountant to keep the books. Well, first of all, we don't make money. We don't do anything. I mean, so we're trying to figure out our statement of cash flows. So my question is, did cash flow when we hired the accountant? We've only hired the accountant. We haven't paid the accountant, so no cash has flowed. Okay? All right, number 4. So you're going to leave number 3 blank. Number 4, received $50,000 cash from the issuance of common stock. What is that? Financing activities, right? We received $50,000 cash. That is awesome. But that is not our regular mode of making money, right? That's not how we make money. We don't make money by issuing stock. We make capital. We create capital. Okay, what else have we done? Borrowed $5,000 from State Bank. Again, that's financing. That's us financing our business. We paid $14,000 cash for salaries expense, right? So that's our operating activity. So number 6 is operating activities. Because when we write expenses, when we pay expenses, that's us operating our business. Okay, number 7, sold the land for $9,000 cash. Okay, again, land, investing. Land, investing. Pay $2,000 cash for the loan. It's financing activities. It's cash outflow. Utilities expense, again, operating activities, and then a cash dividends is financing. Remember, dividends is not an expense. Dividends is not an expense. Dividends is not an expense, okay? That's a wealth transfer. We are sharing our wealth with our stockholders. That's not an expense to us. That's not a part of doing business, okay? All right, requirement B. So now that we know this, now we can take that information and we can create our statement of cash flows. Okay, we're going to assume a beginning cash balance of $9,000. All right, so cash receipts from revenue, $25,000. Okay, our salaries expense that we paid. Okay, so again, we're showing a minus sign or parentheses, and our utilities expense. All right. Paid money for our utilities expense. So that's our net cash flow from operating activities. If we had spent more money than we brought in, it would be a net cash loss. Okay. Okay. Or it would be a negative. Okay, so cash flows from investing. So we purchased the land, we sold the land. Right? We did good. We made $3,000 on the land. That's great. Okay, so that's investing. Financing is everything else, right? We issued stock, we got money from the loan, we made a payment on the loan, and we paid dividends because dividends are not an expense. Okay, so we have net cash flow from financing activities. So you're going to add all these up. And net increase in cash is $59,200. And our beginning cash balance is 9,000, so we have an ending cash balance of 68,200. And that is your statement of cash flows. Moving right along. All right. So we experienced the following events. So the first thing that they're going to have us do is they're going to have us go ahead and record these events. All right, so acquired, purchased cash, okay, all these same events that we've been doing. I'm going to go ahead and pause on here real fast. You can take a screenshot. Okay, you're always going to ask yourself which two. You're going to affect, every time there's an event, you're going to affect at least 2 accounts. And we'll get into why later. But you're going to affect at least 2 accounts. So your question is always, which 2 accounts am I affecting? And are they increasing or decreasing? That's what you need to ask yourself for every event. Which 2 accounts am I affecting? And are they increasing or decreasing? In addition to those 2 questions, we also want to know what the account titles are for retained earnings. We increase retained earnings when we increase our service revenue. We decrease retained earnings when we increase an expense. Okay, so this time, instead of just expense, they're getting really specific about the expenses. Okay. Then they're going to have us create all of the accounting, all of the financial statements. Okay, so here's the income statement. We have the service revenue minus our expenses gives us our net income. Watch this number flow into the next one. We have our beginning common stock. Where do we get that from? Let's go take a look. Remember, we have our beginning balances. There's our beginning common stock right there. Okay. For me, it's always important to make sure that you understand where the numbers come from. Beginning common stock 6,000. We issued 30,000. We have a total balance. Our ending common stock is 36,000. Beginning retained earnings, again, $8,000. Oops. Our net income, where did that come from? Our income statement. Okay, less dividends. Our total ending retained earnings is 10,000. Our total stockholders' equity is 46,000. All right, requirement B, our balance sheet. Okay, where are we going to pull a bunch of these numbers? Where are we pulling this number from? Again, you're pulling it here. Cash ending balance 32, land 24. Okay, 32 and 24. Our total assets are $56. $56,000. Okay, this is the number to match. Our notes payable is 10,000. So our liabilities is 10,000. Common stock is 36,000. Where do we find that? Found it right here in our stockholders' equity. Okay, retained earnings 10,000. Same place. Total stockholders' equity, which is common stock and retained earnings, 46,000. Add those 2 together, get 56, 56. We balance. Oh, happy day. All right. Now we need to do our statement of cash flows. So again, you have your operating activities. So cash receipts from customers, cash payments, net cash flow. As of right now, it looks a lot like our net income, doesn't it? Well, don't get too attached to that. Pretty soon, we're going to be learning about a little something called receivables, accruals, and deferrals. So it's not going to line up after that. Okay, we have our investing activities. There's our cash to pay to purchase the land. We have our financing activities, right? Stock issue from the loan, paid out dividends. There's our net cash flow. So we're adding these 2, subtracting that. Net increase in cash. So we've got 4,000 minus 12,000 plus 38,000 gives us 30,000. We had a beginning cash balance of 2,000, right? Right over here. And our ending cash balance is 32,000. Okay, if you notice, it ties out with our ending cash balance, right? All right. This requirement is determine the percentage of assets that were provided by retained earnings. Okay. So the percentage of assets provided by retained earnings, and this is tricky because we didn't really cover this, but it's 10,000 divided by 56,000. Okay. So retained earnings, our retained earnings balance is 10,000 and our assets together are 56. So how much retained earnings goes into here? Okay. And then C2, how much cash is in retained earnings? Cash cannot directly be traced to retained earnings. Retained earnings represent the amount less dividends since the company began. Okay. So it's going to get mixed up real quick. So you're never going to be able to say, oh, well, whatever's in retained earnings, that's how much cash we have. No, no, no. All right. Record the preceding transactions in the horizontal statements model. What in the world is a horizontal statements model? Okay. The horizontal statements model is basically the model that we've been in. It's just stretched out a little bit. And now, instead of just seeing the elements of the financial statements, we're going to see the financial statements. So our balance sheet has to do with this right here. Our income statement has to do with this right here. That was our stockholders' equity, right? Our retained earnings. You can find it in here, and then our statement of cash flows, okay? So they've done the first one, acquired $30,000 cash issuance from common stock. Which two accounts are we affecting? Cash and common stock, right? Cash increases, common stock increases. That is a financing activity. All right, it's an asset source. Not all asset sources are financing activities, just so you know. Okay. Borrowed $40,000 cash from the National Bank. What two accounts are we affecting? Cash and notes payable. Cash goes up, notes payable goes up. Also a financing activity. Okay. Earned cash revenues of $48,000 for performing services. So our cash goes up for $48,000. Our retained earnings goes up because our revenue goes up. Our revenue goes up. As of right now, my net income is going to go up by $48,000. Okay. So you're still only affecting two accounts. You're affecting the cash account and the revenue account. However, this particular transaction affects more than just one financial statement. It's going to affect the retained earnings, which is the balance sheet, and it's also going to affect our income statement. This is sales, so it's operating activity. Okay, they're going to go through the rest. So go ahead and take a screenshot, snapshot of this so that you know how to do it. And again, number 9 is null and void. There's nothing there because that's great. We determined the market value of the land was $75,000, which is fantastic, but it doesn't mean anything. Okay. So it's number 6. Number 7. Okay. Determine the total of net assets Maben would report on December 31st, year 1. Okay. So that's going to be on the balance sheet. So we're going to add our 49,000 to our 53,000, right? 102,000. Identify the asset source transactions. Okay, so we issued stock. That's a source. That's an asset source. Cash from a loan, asset source. Cash from revenue, asset source. Issuance of more stock. Okay, another asset source. And then you're just going to put in their amounts. So we got money from people, from banks, and from our business. Determine the net income. Okay. So how would we determine the net income? So these are our balance. So our net income increased with our sales and decreased with us paying expenses. So therefore our net income at the end of the month or at the end of the year is $23,000. Okay. Will dividends appear on the income statement? No. Dividends are not expenses and do not appear on the income statement. Determine the net cash flows from OA, IA, and FA. Okay, so how are we going to do that? If you come up here to your horizontal statement, sorry I keep scrolling, it's probably going to make you a little dizzy. What are we going to do? We can add up all of our FAs, right? Add up all of our OAs, add up our IA. When you do that, you get 23,000 from operating. We have negative 53,000 from investing and 79,000 from financing activities. Okay, this is fine. This is not a problem. Okay, here they're breaking it down for you. Inflows from revenue, outflows from expenses, balance. We paid cash to purchase land. Okay, we didn't sell the land. Not a problem. It's not a problem. Cash went out. That's okay. That's okay that it's quote unquote negative. It's okay. Cash went out. Not a problem. Okay, we have cash from stock, cash from loan. This is the 2 times that we issued stock, dividend, and we paid on the principal. Okay. All right, now we didn't get into percentages and that sort of thing, but let's talk about it for just a little bit. Determine the percentages of assets that were provided by investors, creditors, and earnings. Okay, so you're going to take assets, total assets, and you're going to divide the investors. Okay, so what did we do? We borrowed money. So 49% of our assets belong to our investors. Our creditors, those are our stockholders, right? Okay. 30,000 divided by 102,000. Oh no, our investors, I apologize. Oh my gosh, I'm sorry. It's been a long day. Our investors that's the stock that we issued. Okay. People invested in our company. They make up 49% of our assets. Our creditors, that's the bank. We went and borrowed money from the bank. They make up 29% of our assets. And then our earnings, what we brought in just by doing our business, makes up 21%. So not too terribly bad. So much better than the other way. Okay. What is the balance in the retained earnings account immediately after event 3 is recorded? Let's jump back up, and let's go see what was event 3, by the way. Earned cash revenues. Okay. But that was in the middle of the year, right? We did a bunch of other stuff after that. It's all right. This is going to go by fast. Okay. As of right now, there's 0 balance in the retained earnings. Okay. Revenue is recorded in a revenue account, not in the retained earnings. The balance in the revenue account is transferred to retained earnings at the end of the accounting period through the closing process. Okay, so at this point, no, there is not a balance in there at all. All right, and that, let me try and get back up here, is question 12. So you're all done. Okay, congratulations getting through the first chapter of homework. And I will see you next time.